Well, howdy there folks, and welcome into today's video. Today's video is one of those videos where it is just a gem dropper. I'm just going to be gem dropping all over the place. We're going to talk about making your first $200,000 in the stock market, getting to a place where you have over $200,000 in your stock market accounts, okay? And yeah, it's just going to be one of those gem dropping videos where I just give you out a ton of gems. And that's about all I got for an intro. We're just going to get right into this, guys. Hope you enjoyed as always. If you don't mind, smash that thumbs up button. That is literally the only thing I ask in return for doing this video for you guys and dropping all these gems here today is that you smash that like button, and that is it. I appreciate it a huge way. Everybody on the channel appreciates this in a huge way. It helps us get a little more reach out there in the YouTube algorithm. I appreciate you guys, okay? So we're talking about it, okay? Getting to a place where you've got at least $200,000 plus in your stock market account, okay? And when you think about getting to a number like that, okay, you want to think about it in terms of what is the least risk you can take getting there, right? And like, how do you get there the fastest? That's what everybody wants, right? They don't want to take too much risk and risk losing all their money, right? And at the same time, they want to try to get there as fast as possible, okay? Now, this was something I was able to pull off before I was age 25, okay? And this was a feat that seemed, I always had the belief that I could do it, but I'll be honest, when I mean, if we go back to like 2009, for instance, right? 2009, I get in the market, very end of 2008, kind of moving into 2009, start studying, start actually investing in stocks. I was probably worth about $2,000 back then, okay? If we go back to my net worth in 2009, right? So to go from $2,000 to $200,000 plus, we're talking, this is a monumental leap, okay? A monumental leap, needless to say. What's that, like 100x of my net worth, and doing it before age 25. It's definitely a thing that, you know, for me back then, right? Where I was making, I don't know what I was making, $8 and something an hour at Walgreens. I think I started at Walgreens making like $8.25. Then over time I was like making $8.75, maybe $9.10 right before I left. Like back then, that seems like, how in the world are we gonna get there, man? That seems darn difficult, okay? But I always like it's very, very important in life that you have the belief you can do something. I feel like, honestly, this is really big, and I don't really talk about this on the channel much, okay? I feel like you have to have a little bit of like manifest destiny in your own life and belief that you can do it even when it seems like, oh my gosh, is that a long way away? If you don't have the belief, it's very hard to make that thing happen, okay? So first off, you have to get the belief. When I had $2,000 to my name and I was like, you know, a near minimum wage worker, I didn't think of myself as a minimum wage worker or a person that was just somebody that didn't have very much money to their name. I thought of myself as, this is where I'm at right now, okay? Fine. This is where I'm going in the future. And I never like tripped off of wherever I was at that particular time in life. I was like, that's fine, I'm here now. I'm going up to the next level and next level over time, okay? I got time to play with here, okay? As long as I'm on this earth, I have time to play with to get to where I'm trying to go in this thing, right? And that's the way you have to view it, and you have to have that belief in yourself. And if you don't really have that belief in yourself, here's what I'll tell you, okay? Here's what I'll tell you. Why not have that belief in yourself? Why not? The people have done way greater things than whatever you're trying to do out there, okay? Whether you're trying to go from, you know, $1,000 or a few $1,000s to $200,000 over a course of, you know, I don't know, 5 years, or whether you're trying to, whatever it is, okay? I can tell you people have faced much greater challenges in life and overcame those, okay? I mean, when you hear about some of these stories, you know, different things people had to go through in life and where they got to in life, it's nothing but just, you know, something that just inspires you at the end of the day, right? And so there's no reason you shouldn't be there to do that and accomplish that, right? So you got to have that belief in yourself that you can do it. Even when I look at my own life where I'm at today, okay? Where today I kind of play life on easy mode for the most part, right? I have a ton of money, right? I have a ton of connections, and honestly, like 75% plus of my stock pick ideas come from my own private group I've been able to build, right? That has over 100 millionaires in there. Over 100 confirmed people that have over $1 million in the market. That is like nowadays I really play on easy mode, right? And I've been doing this for so long that I just automatically kind of know like the next move to make and the next move to make, right? I'm just like, no, that stock over there, that's not the play. We need to go over here. We need to make this play. I need to buy this, need to buy that, right? It's just like, I play it on easy mode now because I've been doing this for so long, right? And I have all these connections. I have a lot of money. Back then, it wasn't on easy mode, okay? I can tell you that. but I had an underlying belief that I was going to get somewhere and I was going to do this thing and I was going to accomplish that and just get out of my way. I'm going to pull this off, okay? So the first part, before you worry about anything in relation to stocks, is having that belief that you can do it. And there's no reason at all you shouldn't. What's the other thing you can do? Say, no, I can't do that, it's impossible? Is that really where you want to go with it? Like, you know, when you just think about it like that, you have literally two options and only two options. One is, I'm going to accomplish this. I'm going to get to much greater levels over the course of my life, over the next 5, 10, 15 years. Or you can go the other way and say, I can't do anything. Those are your only two options. You have one of those two pills to take, and there's literally no in between. There's literally no in between. It's either I can't do it or I can do it. And that's it, okay? And so it's up for you to choose which one you want to take, right? And where you want to go, right? So in getting to a number like $200,000 plus in the stock market, I had to do a lot of things, okay? First thing I had to understand is it's going to take me some time to get there, okay? It's going to take me some time to get there. Back when I had this money, I mean, you know, it was hard to even fathom having 6 figures in the stock market, right? But I understood I had time on my side, right? I'm 18, 19 years old, and I'm like, you know, I can play this out. So this is really, really important time factor. And there has to be a nice balance of patience and impatience in this game, right? Some people are too patient and they don't make moves in their life, right? They don't make the next move and the next move because they're too patient, right? Other people are too impatient and they're always looking at their life as like, I got to get to wherever I'm trying to go over like fast. I got to get there fast, man. I got to get to that $200,000 fast. I got to get to $1 million fast. Okay, slow it down a little bit, especially when you're talking about investing, not the right mindset to have. Maybe if you're building a business, respect. Go out there and try to move as fast as you can, okay? In investing, slow it down a little bit, okay? Let's focus on risk and let's focus on reward potential, okay? So I understood time and I had a nice balance of kind of understanding like it's gonna take some time to do this. It's not happening tomorrow. I'm not going from $2,000 to $200,000 tomorrow, right? Because knowing me, like, if I would have put that in some options or something like that, trying to make that you know, some options that expire at the end of the week and trying to, you know, I would have probably lost the money, right? It's just not the way this game is played, okay? So it's gonna take some time, right, for me to get up to this level here, okay? Next thing I understood is I have to get funnel, okay? I have to get funnels of money into my portfolio, okay? And so this is where I've realized, okay, man, I've got to start making more money. And so I liked working at Walgreens. It was fun. I worked at the store I worked at. It was fun and it was a good environment and the people were cool. But I understood like, hey man, I can't make $8, $9 an hour forever, right? And so I started applying at different places and trying to level up, right? And that's when I got the job at QT, which started me out at about $40K a year roughly, okay? And so now we're talking about I have some real money to funnel in. And also at QT, I realized, oh, I can start rising the ranks. And it was very shortly after. Next thing you know, I'm making actually like 50K plus a year, okay? And so now I have this funnel to start building up to this number, right? Because it's very hard to, you know, get yourself to places when you're investing in the market, right? Very hard to just take $2,000 and make it into $200,000. Every once in a while you hear about some crazy story where some guy YOLO'd his money on options and he became, you know, somebody that had 6 figures, 7 figures in the market, okay? All from, you know, a few $1,000s. I can tell you that's like 1 out of 1,000,000, okay? That is such an unrealistic thing that you can do out there. Some people pull it off, respect to them. Most just fail and they lose all their money and then they're starting back over and they're starting back over, they keep starting back over, right? And that's just a messy situation, right? So that was my first thing I understood. I got to get the funnel of money going, okay? Very key. Now that I have the funnel of money going, okay, and I was able to start getting up to a level where I was able to start putting like anywhere from, I don't know, probably about $1,500 a month to maybe all the way up to like $3K a month into stocks, okay, into stocks. Now, when it came to this, getting that money into stocks, right, I did have to live very, very frugally, you know, borderline cheapskate, right? I definitely had to do that because at that time I had limited income potential, right? And my brain couldn't even fathom like, you know, really successfully starting a business or doing anything where I was going to all of a sudden jump to making $100,000 a year, $200,000 a year, $300,000 a year. My brain just couldn't conceive that at that time, okay? Like I thought about it, but my like literally sometimes your brain just can't do certain things, right? And my brain was at a level back then where I couldn't even imagine trying to do that. And I tried to start up some other, a few businesses back then, even while I was working at Quick Trip, but I always ended up just putting it to the side, not doing it. And essentially, yeah, I even had this one business idea. I was going to start a colored light switch business. Okay, I know this sounds ridiculous, but yeah, that was one of my businesses I was going to start back then. I probably would have failed, but whatever, okay? But needless to say, my brain couldn't fathom all of a sudden making $100K a year, $200K a year, $300K a year. So I understood I had to probably live pretty frugally, and I would put that money into stocks, okay? Now, from stocks, here's the big thing, okay? I started and I got in good habits early on, okay? And this is where we get into habits, okay? And when I say habits, I got into the right fundamentals early on, okay? And what I see from a lot of new people in the market is they get trapped into the wrong habits, okay? And they think it's okay to not read, a 10K, or listen to conference calls, or listen to investor presentations. All this stuff is available on company's investor relations page. We have it so good nowadays. And the next generation of investors have it so good, okay? Back 30, 40, 50 years ago, you couldn't even have dreamt of having the access to all this information you do now. You want to know everything about a company? It's right there for you, literally in a snap of a finger. If I want to know every single thing about, Google, right? Google Investor Relations. Boom, start and look up all their reports, all their information, all their legal proceedings, everything I want to know about the business is there in the snap of fingers. It's the most beautiful thing in the world, right? We have all these websites now where we can see all this data, where a company's trading at for this statistic over here, right? These numbers, their financials, all literally in a matter of seconds. It's all at our fingertips, right? Previous generations couldn't have dreamt of that, right? That's not even conceivable. And so we're living through this unbelievable time, and yet there's still certain people out there that they make the decision to get in bad habits, not putting in the research work, not doing the time necessary to make a successful investment, right? You gotta put in the work, especially when you're younger in the market or you're newer in the market in general. That's the most key time, okay? Because I can tell you, as long as you're putting in that work early on, it's gonna lead to better and better habits over the long term, which is so darn key. If you get into bad habits from the go, man, that's going to put you in a situation where do you think you're going to be in 5 or 10 years? You're going to be in even worse habits, right? If you're cutting corners all over the place in your first year or two of investing, year 3, 4, 5, 6, you're going to cut even more corners, right? You're going to get even more lazy with it. That's not where you want to be. You want to put in the work early on so you set yourself up for the rest of your life, right? There was a big boxing event very recently. It was Floyd Mayweather against Logan Paul, right? And Floyd Mayweather was way up there in age. Logan Paul really young. Logan Paul way bigger. And if you look at him physically compared to Mayweather, it's like, my gosh, Logan Paul looks like a beast, right? Difference is Logan Paul's been training for 3 years. Mayweather's been training since he was 3 years old, right? And he knows every little technique and every single thing about boxing, whereas that guy, he has so much to learn, right? And so we have one guy over here that was taught all the right habits. He almost doesn't even have to put in the work, and he can beat this guy who's way bigger and stronger and younger than him, right? And so in the stock market, very, very similar thing, right? If you get in those good habits early on, you put in that work, it can actually carry you in the future, and you'll stay in those good habits, and you'll understand all these little tricks here and there, and you'll understand when you're researching stocks, you're looking at stocks, you understand, oh, that stock's not the play over there. That's not the one, okay? Over here's my next move. This is where the valuation makes sense. Oh, I can 100% see why Wall Street's going to jump in this stock next. Oh, this is the play. Here's why you can start. It begins to get so easy. It's like a level of mastery, and in anything in life, if you do it for long enough and at a high enough level, you will become a master of it, right? It's mastery. And you just know, this is where I need to go. This is what I need to do. And I literally just feel that nowadays. And I'm just thinking, where am I going to be in 5 years or 10 years from now? Because every single time I've ever looked back at myself as an investor, I've always said, well, I'm a much better investor than I am 3 years ago or 5 years ago. And that's the same thing nowadays. And now I just know like this is where I need to go. This is the next move I need to make. And it's just like you see all the stars align and it's just so easy, right? And I always, bring it back to the sports world, man. Somebody that is just unbelievable at sports, they just know exactly what to do. Remember Tiger Woods in his prime, man? I feel bad for the people that didn't get to watch Tiger Woods in his prime, right? He knew exactly where to hit every single shot. He was just such a master out there. He knew the exact perfect place to hit it, exactly how far. He was a master of it. And in the stock market, you can become a master of it. There's no doubt in my mind. But you don't become a master at anything if you get into bad habits and you don't put in that research work, okay? So I was always willing to put in that research work and do that, okay? Then from there, it's about finding stocks that you understand and can grow. Okay, this is very, very key. And so there were some stocks back in the day that I understood on a very, very high level. And, they were just ended up being huge winners. Okay, one was obviously Cabela's, one was Monster Energy, which back then it was called Hanson's Natural Beverage, Trinity Industries. There were just a lot of different stocks. Cruisy Doozy back then definitely was a good winner for us. And there's a bunch more stocks I could go into. Cabela's, I just understood that on a very, very high level. I was like, oh man, this is a retailer that's growing. I would go walk their stores and I was like, I can see this being so much bigger in the future than it is today. They were also shrinking their stores, which was making them more profitable than ever because they used to open up these like 200,000 plus square foot stores, which construction cost is insane, maintenance is insane, and overall it just creates an environment that's just too much. But they were shrinking store size down to like 120,000 square feet, 80,000 square feet, and this made the business so much more profitable, allowed them to build more stores faster, and those stores were actually much more profitable. The margins were even better on those stores, and so I saw these stars aligning. Then you obviously had a huge boom. There was so many things that went right there. Monster Energy, man, this is something I would work overnight shifts at Quick Trip, man. And you see all the landscapers start coming in. This is in Arizona, right? Landscapers and construction workers all start coming in at 4 a.m., 5 a.m., 6 a.m., right? Because they get started super early in Arizona, right? And a lot of those different trades, right? And so, I see all these workers coming in, and what are they buying? Well, some of them will get coffee or something like that, but a lot of those landscapers and construction workers and service workers in general that go to Quick Trip, they always were going and getting Monster. They go to that Monster cooler and pull out 2 Monsters, 4 Monsters, whatever, put them up on there on the counter, be on their way. And I saw this trend and I'm like, man, these people really love Monster, okay? Or maybe they're addicted to it or whatever, man. But needless to say, Monster sells unbelievably well. I started looking at the company, understood the brand better. I'm like, yeah, the valuation made sense as well. It wasn't like at some crazy valuation where it's like, this PE is ridiculous on the stock. It wasn't like that at all. And so needless to say, Monster was a huge winner for us. Trinity Industries was one where I identified a trend in that company, okay? So Trinity Industries was this company that had a construction side of their business. And the construction side of their business, I wasn't too interested in, but they had this other side of their business, which was rail cars, okay? And basically what I saw there is I was looking at what was going on with the fracking boom, okay? And there was this huge fracking boom going on in North Dakota, South Dakota back then, okay? And I'm looking at this and I'm like, how are they gonna get all this dang oil out of North Dakota and South Dakota over to where they need to get it to? Well, there was no massive pipeline from over there or something like that, and there's this huge boom going on. I'm watching, there was documentaries back then about people who were moving out there making 100 grand a year. I actually thought about it, man, making 120 grand a year, 150 grand a year working in the oil fields and whatnot and doing different jobs up there. It was this huge boom. So I'm like, well, they're gonna need rail cars. They're gonna need rail cars to move all this oil. And I found this stock that was just so under the radar back then, Trinity Industries, TRN, and I looked at this company and I'm like, this is ridiculous. The company was so undervalued. I don't remember what PE was trading at, a 4P, but it was ridiculously low. And I'm like, dude, they have years and years of demand, and this is the biggest player pretty much out there. There was another competitor to them, called, I think it was Greenbrier Industries or something like that, okay? And that was like a smaller company, but Trinity Industries was the big whale in that industry, okay? And I'm like, they have years and years of they're gonna have to make massive amounts of rail cars, and the dollar amount they're gonna be able to get for those rail cars because they're so in demand is gonna be ridiculous. And sure enough, Trinity Industries went on this massive bull run. I mean, massive bull run, because the next thing you know, their revenues and profits pouring in were ridiculous. And all of a sudden, everybody wasn't viewing Trinity Industries. When I say everybody, I'm talking about Wall Street. In Wall Street money, they weren't viewing this as just some construction company, because they had a construction side of their business where they sold all these different things that were used in construction industry. It was a rail car story after that. And then they started leasing out the rail cars, and they built out that business. It was amazing, okay? And the gains we made in that stock were just tremendous. In Cruzy Doozy, that was just a player that got in with Apple at the right time. They probably got in with Apple going back in time now. It's probably, I don't know if it was 2010 or 2011 when they first started showing up in the iPhones with their audio codecs. But I saw this company is just an innovative company in the audio space that was going to get into more and more products over time. Sure enough, they did. Next thing you know, they were in the iPad minis, and they were in other iPads, and they were in other devices in general. And then they started getting more chips in the iPhones. Nowadays, I think Cruzy Doozy has, I want to say, 4 chips, if not 5 chips in the iPhone, and maybe even more coming in the future with more functionality in their chips. And so the ASPs they can get are higher and higher over time, okay? And so I saw these trends, capitalized on them. And so if you're thinking to yourself, like, how do you get to these sorts of numbers? It's about finding those stocks that are game changers, okay? The ones that have a beautiful story behind them, and you can understand the fundamentals of the business and why this business is going to thrive over time. And the valuation lines up, and the valuation looks like a deal, right? The valuation matters, okay? So many times people want to buy stocks in the stock market without paying attention to the valuation. Something I never take for granted is the valuation of companies. There's probably 1,000 different stocks in the stock market where I like their businesses. I really do, and I believe in them. Do I own 1,000 stocks? No way, because I'm looking for the ones that are the best deal, that have the most upside and the least risk possible. And that's where you get into valuation. And that's why I'm always, for the most part, I'm trying to find companies that have PEs under 30 and forward PEs under 20 ideal. I can't always find those, and sometimes I'll buy stocks that, you know, have valuations higher than that. But man, if it has a valuation higher than that, I need some crazy profitability from that company down the road, some crazy revenue growth over in future years, okay? That it has to really satisfy me in that respect. I have to be able to run numbers on this company and understand why in 3 years from now, the valuation actually looks like a joke where they're at. That's fair play, but sometimes people are buying into some stocks out there, right? And people are buying in these stocks because they like the business model, they believe in some short-term trend or something like that, without looking at the valuation. And the valuation is a whole game. You buy, like, literally everything in the world, pretty much asset-wise, is all about what price you buy it at, right? You want things for as good a price as possible, so you can sell them for as much as possible down the road, whether that be in a day, a year, 10 years, or 100 years from now, or whatever that is, right? That's the name of the game. And so if you're paying a bad price, man, you just got to understand you're going to limit your gains, and you're going to increase the chance you lose money in that investment exponentially. That's why I'm looking for deals in the market. It is about that valuation. Like, people always are like, oh, if you don't buy their stock, you don't like their business? Not that I don't like their business. I might love their business. I don't like the valuation that stock's trading at. It's too rich. Therefore, if I buy that stock, it's going to put me in a situation where my gains could be very limited, or it puts me in a situation where it's just going to be a higher and higher probability I lose money in that stock, right? And, for me, I better, like, how I judge myself is I better be making money 95% plus of the time when I'm buying a stock over the long term. The short term, anything can happen, meaning like that in that first year of that investment, anything can happen. The price can fluctuate, all these things. I actually hope it goes down the short term. I'll buy more shares, right? And I've done that with a ton of those stocks over time. They had some short term weakness. I built my position bigger and bigger, okay? But I better, over the long term, I'm judging myself a minimum 90%, but really I'm looking for 95% plus, like, scalability, meaning like the 95% plus of the time I make money on that investment and able to scale my portfolio by the time I sell out of it. That's very key for me. If I can't do that, then, some people, everybody has different goals, right? I've heard some people try to have a 55% or 60% win ratio or 65% win ratio, right? And maybe that works for like day traders or stuff like that, but I'm telling you, for a long-term investor, I want 90% plus of my stocks winning. If 9 out of my 10 stocks aren't winning, I'm doing something wrong. And if I'm doing something wrong, then I either have to look at my philosophy, like what I'm looking for in stocks, or I have to ask myself, am I actually putting in the work? That's what I would go back to. If I wasn't hitting those sort of numbers, and if you're not hitting those sort of numbers where you're in a stock for 2 years and you're down on it, or in it for 3 years, you got to go back to the drawing board and ask yourself, did you actually put in the work necessary there, or did you buy some overvalued, overhyped stock or something like that, okay? That's very, very, very darn key. And you know what else I didn't do? I didn't ever care about anybody's opinion on CNBC. No disrespect to CNBC. Didn't care about anybody's opinion on Seeking Alpha, or any websites, or anybody writing articles about my stocks, or anybody on TV, or anything like that. I didn't care about that. I didn't make judgments off of that, like, oh, they said something bad about my stock, I gotta sell. Never made a judgment ever off of anything like that. And so you got to ask yourself, what are you going to make judgments off? You're going to believe in yourself, or you're going to believe in others, okay? Very, very key. I'm always open to hear another person's opinion on a stock. Hey, you want to give me your opinion on blah, blah, blah? Let's hear it, okay? Doesn't mean I will ever make a judgment, okay? My job at the end of the day is like similar to, like, I don't know, a coach. Let's say you're a coach for some professional team of some kind, right? Everybody has their opinion. Every fan's gonna have their opinion. Oh, you should play this player more. Oh, you should do this play more, right? At the end of the day, that's that coach's job to say, listen, man, I'm in this position and I make my own decisions. I'm going to make decisions. I'll hear everybody out. Let me hear everybody's opinion. But at the end of the day, I'm going to make my own decisions. This is my life. I'm going to make my decisions on where I buy stocks, what I put my money in, and things like that, okay? And that's very, very key. So to get to this sort of number, you got to understand it is very, very possible. You're going to take some time. You got to identify the opportunities. You got to think about the risk, right? Because when I was climbing the numbers, right? Let's say I got to, when I hit 30K, right? I could have easily went left there. And then next thing you know, all of a sudden I'm doing some crazy stuff, getting myself into some major trouble. And then next thing you know, I'm down to 10K again, right? The big thing was I kept climbing and kept climbing and kept climbing and kept climbing year after year after year. I was bigger than the last year. I was bigger than last year. That's the main thing. Each year, you want to be able to look at your portfolio and say, is this portfolio bigger than it was last year at this time? If it's not, then what are you doing wrong? Are you not putting in the work? Or are you not being able to funnel any money into your accounts? Or are your stocks just bad? Like, what is going on? Okay, you got to go back to the drawing board. Every single year, I want to be able to look at my portfolios and them to be higher than they were at the same time last year. I can say that every single year other than 2015 into 2016, I can say that. 2015 into 2016, when I got into some short-term margin trading and earnings trading and things like that, and I went off the rails, that's the only year probably since 2008, 2009 that I wasn't able to say I leveled up, right? Every other year, I've been able to take that next step. And from 16 to 17 we grew, and 17 to 18 we grew, and 18 to 19 we grew, 20 to 21 we've been growing, right? And so that's the name of the game. That's how you should judge yourself. Don't really judge yourself too harshly on percentages. I aim for 30 to 40% plus a year, okay? But if I wasn't to hit that in a year, it's not the end of the day. Is my account bigger than it was the previous year? Sometimes I'm going to destroy that number. Last year was a triple-digit year for us. Unbelievable, right? That's not going to happen every year. I wish it could always be triple-digit years. But as long as I can keep, hitting these home runs at the pace I'm hitting these home runs, the numbers will be a lot bigger in the end. So that is a gem dropper for you guys there. Hope you enjoyed this video as always. All I ask in return is that you smash that thumbs up button. If you're looking to join my private stock group and you're looking to take investing much more serious than you've been taking in the past, you want to join the private Discord chat, potentially get coaching, all those sorts of things, check out the first pinned comment down there, okay? And also the second pinned comment down there will be if you want to sign up for Webull and get 2 free stocks valued up to $2,300. Check out the second pinned comment down there with that link. Thank you for watching and have a great day.